The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 11th. Terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe that we should always be pioneers of our future and never, ever be prisoners of our past. Of course, one of the best ways to accomplish that is to always remember that in life, everything happens for us, not to us. Boy, what a small little change of word, one word out there, and how it can absolutely impact your life. And that means that if we can understand and realize that things are happening for us, then we can see the gift in every set of circumstances that occurs, because circumstances, they're like the wind. All you got to do is learn to plant that sail and let that wind be at your back out there, folks. It is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Of course, I'm here to serve you, so that means you can give me a call at 877-927-6648. You and I, we can go take a look at your stock chart, commodity chart, any kind of currency chart, whatever it is you'd like to look at out there. Of course, internationally, you can reach out to me as well at 727-445-1044, because I would absolutely love to hear from you. Hope you had a great Monday. Let's kick these markets off here right now. Relatively flat out here. Dow futures up 5 points. They're trading at 17,558. ES mini up a point, trading at 2035. NASDAQ futures up 3.5 points. They're trading at 4173. King dollar up 4 pennies right now. So quiet in the currency market. We're going to have to stretch these next 2 hours out here if it remains quiet like this. Goldilocks back $4 right now. She's trading at 11.56. Silver's up 8 pennies, trading at 15.59. Silver. I said silver. You got light sweet crude up 9 cents. That's trading out at 77.30. Looks like flat across the board. Let's go barefoot water. Let's go barefoot water. Let's go barefoot skiing. How about that? You know what I mean. Hey, if you were, I had a couple of emails from some of the folks out in Colorado yesterday. They were telling me that temperatures were dropping 30 degrees, 40 degrees in minutes, hours out there, less than an hour out there. That's pretty intense. That's a cold front that is moving through. And then, of course, over in Hawaii, they got the lava that's continuing to roll downhill and burn out homes. That's an unfortunate situation for sure. Hey, let's follow up on a couple of housekeeping items here. Yesterday we talked about really two areas. We talked about the Nikkei. And, of course, the Nikkei, in one sense, looks a little bit like some of our indexes out here. And at the Nikkei, if the U.S. market handed off, we had a bad session yesterday. There was a chance that the Nikkei could form a key reversal session. Well, none. Of course, the things were okay in the U.S., just a gradual move to the upside out here. So we handed off the ball pretty good to Asia last night. And inside of the Nikkei, no island, no island top out there. And also, we were looking at a ticker symbol yesterday. It was Seadrill, I think was the name of it. SD. Let me switch over to a different page out here. I think it's SDRL is a ticker symbol. Now, on that one, it was one of the only things I could find of interest that showed a potential. This is a stock that had been hammered pretty well. It was the only thing I could find. It's a potential island bottom reversal pattern. That never came to fruition. It did gap up yesterday. In fact, it almost was at its session high. In fact, if we take a look at it, if you're watching this on TigerTV, and I hope that you are out here, what we can see, and one of the reasons why we took a look at this trade is because it had one of our favorite bottoming patterns. In fact, I'm going to be teaching this specific pattern, how to trade it in my 7-week trading, coaching, mentor program that is going to begin on November 22nd. That is on a Saturday. We'll talk about that a little bit further in the show out here. But if we take a look at we had price moving down, didn't get any kind of bullish reversal signal or anything along those lines. But yesterday would have been it, because there's nothing more bullish than a island bottom. Nothing more bearish than an island top out here. And we had that going, even though it was just 5 cents. We had to be real close in taking a look at what was going on out there. But that island no longer exists. Just simply price moved up into the gap. It closed that. It also moved into the bottom of its market profile. That's the green horizontal line going across my screen. That's priced out at 22.62. That acted as a resistance. So nothing looking good here for Seadrill. We'll just cross that one off of our list there, SDRL. So now we got all the housekeeping out of the way. Let's go take a look at the markets. Where do we want to start out here? If I take a look at, let's start off by taking a look at the indices. Let's just simply recap where we are at out here. Let's take a look at the futures market. Let's take a look at the Russell 2000 first. Russell 2000 right now trading into its market profile high, resistance level 1176.90 out there. If, in fact, the Russell 2000 can get above that area, pretty good chance of what it will do. Well, first what it will do is it will run to the swing point high. It's trading into that, which is September 3rd. So all the other markets we're looking at September 19th. Inside the Russell 2000, it's September 3rd. That high is 1187.90. 1187.90, so you got about another 10 points. A pretty good chance if it can, that's where it would run to. Closes above 1187.90, then we see that move to 1212, the top of the consolidation. I am still in the camp that we're going to see, market has gotten a little bit off course here. And by off course, meaning seasonally, a number of other things that really ought to be pulling back out here. Now, in the case of the Russell 2000, where could it pull back? We haven't seen any signs of that yet. That is for sure. And there are some liquidity events that are going on right now that are saying it'll actually be pretty tough to do that. If it did, that would actually be good news because these liquidity aspects suggest, higher price out there. But right now, we just stay focused on the Russell 2000 on a daily contract. 1154 would be a pretty decent level of support for it to test. If we get below that, then we'll take a look at a little bit more of a deeper retracement. But right now, it's just hammering away, trying to get above resistance. 1176. We'll just call it 1177 will be the number that you want to keep an eye on inside of the Russell. Inside of the Dow, we take a look at the Dow. One of the things that we looked at here was at this just nice little gradual move, kind of a linear move, quite frankly, to the upside. Looks like that really is still in place even as we speak today. We've seen a couple of signals of the market getting tired, but it's overcome those signals. Maybe it just simply took a nap. That's really all that it was doing on November 7th. Excuse me out there. A little technical swig of water. That doesn't hurt. And in the case of the Dow, at this stage here, pretty good chance of just simply wants to move and groove up to 17,689. You're at 17,559. So that's another 130 points northward inside of the Dow, short of any kind of reversal. If we were to see a close today in the futures market, in the Dow futures below 17,499, that would then suggest, okay, the retracement, the pullback that we should be expecting going into maybe the 20th, 21st, just before the workshop that I'm going to be holding out here on a Saturday. We're going to kick it off on a Saturday, this 7-week coaching, trading, mentoring program out here. So inside of the Dow, well, that's what's going on inside of it. If we take a look at the NASDAQ out here, NASDAQ, the big dog, it really just been consolidating sideways ever since October 31st. I mentioned on October 31st, I mentioned every day since it's going to be a market that's going to be sideways consolidation is going to be frustrating to many, even if you're bulls. If you're bulls, it's going to be frustrating because the market, it's moving up, but it's just moving up so gradually. You're like, what the heck happened out here? We were moving up so nicely. Now, positive on the Qs. If it can get above the 41.75 level, you're at 41.74 right now. Then price ought to move up to 42.37 at 41.75 area, right around the TAS market profile resistance zone. But all that the Qs have been doing, just really been traveling in a sideways consolidation out here. Typically, prices will fall. In this case here, based on what's transpired, prices ought to fall out of this level. But no reason for it to not make that expansion up to the 42.37 area. That's what's going on inside the NASDAQ. If we take a look look at the S&P futures out here, S&P futures, they are above their resistance level, their TAS resistance. They're above September the 19th. They've shown a number of signals that say they were sleepy, they were tired, but nonetheless, they continue motoring on higher. If you'd almost kind of right now have to rely on the Dow to be the Dow to pull everything out of the doldrums out here. Even though the S&P is above its resistance area, it's really probably going to be about the Dow. So watch the Dow, I think, for signals out here. We know the NQ, we know the Russell 2000 up against resistance. Yes, the S&P is above the resistance level, but I'm going to call it the Dow to be the one to watch for. If, in fact, the Dow moves up today, moves up and makes that 1.272 expansion, we probably see the S&P do the same thing. You're 2035. That's got another 30 points northward to run up into the 2069-ish level. So that's what's going on inside the daily contracts for the futures markets out there. If we take a look at what's going on inside of the currency pairs out here, we'll take a look at the Euro-Japanese yen just to kick things off. The Euro-Japanese yen, it's on its way northward out here. That says the 1.618 expansion of its last set of swing points. That takes you into the 145.59 area. Let me see, is there an A to B equals CD to the upside out here? No, none worth paying attention to. What we also can see, it's kind of interesting, that expansion inside of the euro-yen and where price is targeted. It also happens to be the December 27, 2013 high. Now, our markets, they made a high, January 3rd, I believe, before they started to pull back a bit out here. And the euro did, and it's just another indication for you, the reason why you want to be paying attention to this currency pair. Again, the directional correlation, it's unmistakable out there. It's just simply unmistakable when we take a look at it tracking the U.S. stock market. Specifically, I just simply look at the S&P. However, I have noticed there have been times here where when we saw the big decline in the market back in, not October, the one prior to that in the middle of summer, it was really the NASDAQ. The NASDAQ had the deepest retracement, I think maybe because of the biotech sector, the IBB, that really fell out of lockstep out there. The Dow and the S&P didn't really pull back that much. The Russell did, the NASDAQ did, and so tracking the Euro-Japanese yen against the NASDAQ is also really well. So the reason why I suggest that price at this stage here is going to move higher now, it's over bought for sure. It's well above. It's RSI reading is about 76 right now, but it got up to the 1.272 expansion. If you're watching us on TigerTV, that was 143.15 or so. Had a key reversal session. That should say that significant resistance out here. That's November 6th. Now, price has not gotten above that level. Could be that we're just going to see a test out here. That test would be the high of 144.22 before it then decides to go up to the 145 level. But if it closes above 144.22, that all-important key reversal session will have failed out there. Nothing more bullish than a failed bearish signal out here. Now, candlesticks on their own are not enough to trade. You don't want to do that. You got to find some other type of pattern out here. Hey, an expansion of swing points certainly qualifies for that. But if we do see a move above that high, you're looking at 145.59, and what you'd really love to see is the market actually pull back. You'd love to see the market pull back, meaning the stock market, the S&P, the Dow, and see some kind of divergence out there. Because who's going to win that diverging battle? It's going to be the Euro-Japanese yen. That would be a gift. Don't know if we're going to get that gift or not. Moving to the upside, Vodafone, China Financial Online, and Ashland Pharmaceuticals, Alibaba, Compass Diversified, and Velocity shares for natural gas pulling back. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change in the marketplace out here, but let's go out to Philly to our man John, as known as Z in the Tiger's Den. Hey, John, what's the I know you live in the city of brotherly love, but I don't know the story behind why it's called the city of brotherly love. Why do you get to be in the city of brotherly love? I think Florida or Orlando is a city of brotherly love, but why do you get that recognition?
You know, it derives, I believe, Steve, from the name itself, as in Phil and Adelphia.
Ah, okay, okay.
And if I'm not mistaken, of course I could be, and I am often wrong, but either the first or second portion of that phrase, I believe, has to do with brotherly love out of Greek language, but I think that's the story.
Okay, I like that. Hey, that's a good story.
You know,
we're sticking to it.
Even if that's incorrect, it sounds good. So you can take it on me if you like.
Hey, look, you got your wingmen in the den. They're saying ding, ding, ding. You're a winner. You got it. So
very good. Okay.
So
terrific.
Apparently, your host, Alex Trebek here, I've got to award you a bonus or something like that out there.
Terrific.
You want to take a look at the USO, so the long position for light sweet crude. So tell me what you're doing.
And Steve, on oil.
Yeah.
I always start looking at oil that is traded around the planet and not at a specific delivery site. Mm-hmm. And hence I always start looking at the Brent futures contract because that is not location specific.
Mm-hmm.
Anyway, mm-hmm. Brent peaked on a spot basis in June up at 115 when there were warring factions invading northern Iraq, and there was concern over Iraqi oil supplies out of Kirkuk, mm-hmm. that area. Since, Brent has fallen $33 down here to 82, and just made new lows for the move. But we've lost, in terms of the velocity of the price decline, the decline has lost momentum. Doesn't mean mm-hmm. it's bottomed, but it's going down at a much slower pace. And I have suspicions, fundamentally, to suspect we're near a price low. Down $33. Fundamentally speaking, global economic activity has not contracted that severely where global demand would be decisively down to accommodate that. And of course, I could be missing something, but that's kind of my read. So mm-hmm. my question to you is, do you see, looking at your charts, either on Brent or WTI futures or USO, the ETF, do you see any parameters that you can share with us as to, if we buy it, where and what sort of stop loss we ought to be using to speculate on a bottom?
Well, so it's a great question, and thanks for providing all that information. If we take a look at the continuous contract now on my screen, just so I've got more data to take a look at, that's what I've got. First, the pattern that is out here that suggests a potential bottom could be forming is the mere fact that since the formation of the candle session on October 15th happened to be a hammer candle, we did see it close below that. But at that stage, when I take a look at the velocity, and you mentioned something about the velocity of the momentum out here, so I'm utilizing the momentum indicator. And if we take a look at the velocity on the 15th, that's when we saw the biggest push to the downside. Yet we have seen price move sideways to lower and do it with less relative weakness out there. And that pattern actually first reared its head, and that was on November 14th. Or November 4th. We're not even at November 14th. And in that very next trading session, John, you got a nice bull sash candle. That says that, and what also, if we take a look at wave counts on the way down, this is kind of a second iteration. I have that labeled as the 6th out of 7 waves to the downside. So I say there's two potential setups here. Number one, this low where we're at could hold, or, which it should, but we didn't really get much in the way of follow-through after we saw that bottom. And typically when you get those bottoms, they're a little bit of like a slingshot. We didn't get that out here. Hey, you want to hold on through the break, or?
Thanks, Steve. Sure.
Okay, that's great. We get back, we'll go see how these markets are going to open. Then we're going to go back and we're going to take a look at the light sweet crude, see if we can figure out where a bottom could be forming. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. Moving up and down, up 7 points, straight out of 17,620. S&P is flat, Composite is flat, Russell's down a point out here. Leading the charge, the upside, you've got Tesla up $4, Rackspace Hostings up 7%, up 260. Kiwi PLC up a couple of dollars out here. Vodafone up $1.80. The downside, Baidu leading the charge off $3.45. Applied up to Electronics down $3 off 20%. Alibaba off $3 right now. Wayfair Inc. off $3.76. All right, so I want to go back out to Light Sweet Crude. Our man Z John went ahead and got off the line. just asked me to follow up on it. So I want to do that and take a look at really a couple of different chart patterns. So his question specifically was, hey, can you see a bottom out here? If so, why? Where would one trade it? Where would stops be? And so forth. So we're taking a look at light sweet crude. And the pattern that we like the most, one of the patterns that we like the most where things can get stretched out here. If you watch us on Tiger TV, and I don't have the actual contract up here. I've got the continuous contract, so I've got more data really to take a look at. And what we saw here is, again, on November 4th, the push down lower was with lighter energy, less energy out there. We saw a reversal signal the very next session on November 5th. Didn't get any additional follow through. It's these moving average lines out here. The 8-day is the solid. The 13-day is the little dash line out here. That 13-day moving average has acted as resistance, real good resistance all the way down out here, even on those intraday spikes out there. If we take a look at the move up here recently, that was yesterday, you can see that 13-period exponential moving average held as resistance. So what does that say to us? It says, if in fact this is a buyable bottom out here, if you were trading it, you're going to really want to see price get above that 79.40 level, because that 13-period EMA has held as even those intraday spikes out there. So you've got, and now we've also got the continuous contract. This ought to work okay. Looks like you've got a TAS market profile bottom at 76.54. So you've got all the messages right now that you could go ahead and you could take a stab at it. Where would you put your stop? You've got to put your stop actually not just tuck it right below the low of November 4th. It's got to be given a little bit further room than that. Or it's right below it, and you're going to wait to see where that thing punches down to possibly give you that 7th wave count on the way down. Then you could, if you got another reversal signal, go ahead and get into the trade and just simply put it 1 penny below wherever that low turns out to be. But right now it's got some resistance. Now, why does it have resistance? Trading light sweet crude is no different right now than trading Goldilocks. Well, there's a bit of a difference. I can tell you that the difference is the following. Well, first, let's go take a look at one of the similar patterns. What did I actually mean by that when I take a look at that correlation? So I'm going to do that while I'm also trying to switch over to another set of charts out here. Okay, the chart that I've got on my screen right now that we all have to pay attention to is the upper portion. It's a continuous contract for light sweet crude. The bottom happens to be the U.S. dollar index. You've got light sweet crude valued in dollars. Well, I mean, in one sense, at least the way that we're looking at it. The reality is it's valued, you're going to value it in the currency of where you're located. What we can see, though, is the correlation here. And the correlation that we can see is that the movement of light sweet crude is in direct proportion to, directionally speaking, the movement of the U.S. dollar index. So in order to go long light sweet crude, you're also taking the trade that you believe that the U.S. dollar index is going up, or that the euro primarily is moving back, and why, or is moving higher, the U.S. dollar index pulling back. Why the euro? Because it's 57.6% weighting inside of the U.S. dollar index out there. And so there is just no way that the yen, although it has been moving higher, and therefore that means it's been getting weaker, the U.S. dollar index is getting stronger, right? That's not, I mean, we'll go back and take a look at the currency pair, but it's really going to be, in my opinion, it's really going to be all about the euro. So to take the trade for going long light sweet crude is the same thing as really saying that you're expecting that the U.S. dollar is going to pull back. Now, on my screen, you've got the red line, the bottom line. That is moving down lower. I've just inverted the U.S. dollar index so that it becomes visually easy for you to identify the correlation between light sweet crude and the U.S. dollar index. So that means you've got to pay attention to the to what's really going on inside the euro. Now, I mentioned that this was similar to like the gold trade out here. You know, if I put up that correlation chart and we take a look at it, both gold as well as the miners out here, now I've got them all the same color. It doesn't really matter. The ETF for the miners out here, the bull miners, the nugget, that's the upper portion. The center portion is gold. The bottom portion happens to be the U.S. dollar index. So you can see the correlation that's going on there. The difference that I see out here between light sweet crude and Goldilocks is the following. So when I take a look at what the big boys are doing, the supposed smart money out here, you know, I don't get as clear of a signal with regard to their position. They've been getting out of their shorts. So they've been clearly doing that. Now that's expected. That's what you expect as the market starts moving, because these are the big boys, the big ships. They take these large positions, and then they just simply, they can't turn on a dime dime out here. So I don't see where light sweet crude has gotten down to the lows to the bottom that formed back here in June. I don't see that with regard to what the big ships, the commercial traders are doing, as much as I see that in what's going on inside of gold and silver. It's undeniable that the large money, smart money operators out there, are continuing to get into less and less net short. Now, they're always net short, either because of contracts being sold forward. They've just always been net short, so it's always an evaluation of net short. Now, this data here, in essence, is as of Tuesday afternoon. So I only know what the large commercial traders were. We only know what large commercials were traders were doing as of Tuesday afternoon. But I can tell you, even with the big push down inside of gold out here, they've been moving to, in essence, more of a long position by evaluating their net shorts out here. And so that is, so this is a clear signal from my standpoint with regard to the big boys. That's all. But you don't have to worry about the big boys. All you have to do is just say, hey, what is going on with the currency pairs out there? Because it is going to be very difficult for gold. It's going to be very difficult for silver. Silver's got the same pattern out here that gold does. Bottom portion of my chart here is, again, taking a look at silver as a percentage of open interest out here. We can see that it, too, is down to these low levels. It can get lower. It was lower out here back in the July lows inside of silver. So we're still not down to those levels out here. But they've taken a fairly rapid move to get out of being short inside of silver to getting to that less short area. So to me, it's clear inside the metals with regard to what the big boys are doing versus the crude oil out there. But nonetheless, no matter what I put up here, commodity-wise, we're going to see that correlation between what's going on inside the currency pair and it. As soon as we see those currency pairs reverse. Now, the other thing is, okay, as long as I'm over here, and somebody could be saying, well, why is it that you even believe that the U.S. dollar index is going to fall out there? And I think that's a great question. That's one that I would pose, because if everything really hinges on that, then why are you even taking a look at it? And it's because of this. Now, you can go take, and you should really do this. I don't have that chart because the calculations that are involved with taking a look at the U.S. dollar index and their currency pairs. It's just easier to just go take a look at what's going on inside the ICE futures out here. And what I can tell you is that the large commercials are up towards their highest levels. Their highest, I can tell you, if you go take a look at the currency pairs, they are at their highest levels ever. Which is amazing. With the rise in the dollar, with the fall in the euro, in all the hyperbole and everything that is out there inside the media, these guys are smart money. They are smart out here. Now, the problem is that they take a while to get their engines revved up, to get their positions in place. I think I heard Basil talking yesterday about, these large banks, these large commercial banks out there. When you take a look at the currencies, they're taking these positions over time. And he is absolutely so correct out there. In fact, I have found, there's another chart that I follow, which is the euro dollar, which is an interest rate vehicle. And I have found that when you take the euro dollar and you push it forward by about 52 weeks, it really correlates well to the market. Sometimes that correlation gets off. But what that really means, and what Basil was saying yesterday, and I totally agree with him 100%, is it takes a while for those people to position. When it comes to currencies and their ability to actually move through the marketplace, my experience in taking a look at charts is it takes 1 year. You can actually find out what was going on a year ago and then try to correlate that to the charts by being, and I used to be able to do that more easily. Is that even a proper grammar? No, I'm probably being tossed out of grammar school. But you can do it it's a lot easier to do. I think that's okay to say. It was a lot easier to do on a different charting application where I could actually push those lines forward. I haven't found out how to do that just yet, but I'll try to find a way. So it is because, what we can see out here is that the big money. So I don't know how it fundamentally plays out. It's going to be interesting to see because I can tell you in advance what the big guys are doing out here. And what they're doing is they're saying the euro is going to move higher. Now, is it moving higher today? Well, let's take a look at the futures contract for the euro, since that is up to the moment out here, and we'll see. The answer is no. It's flat. So the euro, what has the euro done, in essence? The euro's been moving lower with less relative weakness, much like when John and I took a look at light sweet crude, the continuous contract in light sweet crude out there. Same kind of pattern. Well, the same thing is going on here inside of the euro. It's made a 1 to 1.2728 to be equal CD. It could go even lower, make the 1 to 1.618, get down around 1.2328. It could certainly do that. Has not given us any kind of bullish reversal signal. We had this little piercing candle that arrived on November 7th, and then yesterday it just said, the heck with you. Went ahead and pulled back a bit out there. That's why we saw gold and silver pull back yesterday as well. At this stage here, we're not seeing anything. We're basically flat. So we're flat inside the euro. Well, where are we in gold and silver? In gold and silver, you got gold back up $4 right now. Silver is down 10 cents. Actually, the biggest mover has been natural gas, but it's well off of its lows out here. So let's go take a look at natural gas and see what it is doing out here. So it was off about 12 cents, I think, earlier in the trading session. Yeah, it was. So let's go take a look at what natural gas has done here. If you recall, when we took a look at natural gas, now this is the December contract out here, so it's still the active front month contract, 4.25. That happens to be the highs out here, or close to the highs on August 28th, as well as October the 1st. That really became our resistance zone. Price broke through that resistance, did it with accelerating volume, moved through there, came back, and it tested that area yesterday. But it came back with too much volume. Was a key reversal session out there. So we've looked at some of these key reversal sessions. We were looking at one earlier inside of the Japanese yen, the euro-Japanese yen out here. At this stage, price is broken back below resistance. It's trying to fight that off. It's gotten down. It's come down to its 8-day exponential moving average, right around the $4.10 area, close to its TAS market profile point of control, around 407. If natural gas, and it's been what a cold Arctic blast, right? I think there's even more to come out here. So the retracement from low to high out here, it's trading right at the 0.382 retracement. So earlier it traded a bit lower. It may be that all that we get is just simply a 0.382 retracement inside of natural gas. Hey, let's go out to Burlington to our man Mike. Mike, thanks for calling. Thanks for holding. How you doing this morning?
I'm good, Steve. How are you?
Excellent. Thanks so much for asking. Now, you getting part of that Arctic freeze blast up there?
Yeah, it's about 30 degrees this morning, I guess. Not too bad. But, yeah, chilly.
Yes, good for you. Good for you. You want to take a look at the small caps, the ETF for the small caps, the IWM. Tell me how I can assist you.
Well, I sold TNA last week, and I'd like to jump back into it. I was thinking we were going to get this retracement or pullback, after listening to you, but it seems to be creeping up this week. So,
yeah,
out there.
My thoughts are still that, so inside the IWM specifically, in taking a look at it, what it is doing is it's still just trading with inside its most recent swing point, September 3rd. Now, the IWM has got 33 million shares at that swing point high. Swing point, by the way, the range of it is 116.27 to 117.80. So you've got 33 million shares. As price came into that level, came in with nice volume on October 31st, 53 million, 39 million the next day, 37, 31. So you're in there. Now volume has started to drop off, 28, 29. So it's just kind of average out here. I think what you're likely to see, as long as price stays inside this swing point, it ought to get a test of the 117.80. It could be at that stage, Mike, where you then begin to see the pullback inside of the Russell 2000. So I think what you would want to do is you would want to take a look at two possible trades here. A clear break above 117.80 with some volume. Then that would say, okay, it may be time to hop on board the train, that it wants to leave the station and move up to the next level, which is the top of the consolidation. Inside the IWM, by the way, that would take you up into a price range of about 121, 120.96, I think is the number out there. 120.97. On the other hand, I still believe that we're going to see the market pull back here between now and November 20th. And all of the indications are everything is still present for that to occur. Your question might be, hey, what would those things be, right?
Exactly.
Okay. If you hold on through this break, we'll go take a look at them, you and I together, in bisecting and dissecting these markets out here. This is Steve Rhodes. This is TFNN. We'll be right back.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. It's a flat market out here. Dow's off 10. S&P is down 50 cents. Composite is off about 9 points. So, Mike, when the markets were moving up in October 31st out there, and you've been in the long trade for the IWM for a bit of time, right?
Yeah, I was in TNA for a while.
Yep.
Yeah. And so when the markets were moving up after that, supposedly as a result of the announcement from the Bank of Japan, the markets were moving up. So I was able to identify that the markets were making a bottom in October out there. And when the markets were moving up, when I took a look at the trading patterns that were out there at that stage, because I remember being, on the show with Tom, I was over in Clearwater, and said the markets are going to now move sideways, consolidate. Now, the Dow is the only thing that really hasn't. So the first thing that I say is, even back then on that day, I was able to say that markets are going to consolidate. It's going to be frustrating for both bulls and bears. And I would sense there's maybe a little frustration, not bad frustration, but, it's kind of a little bit of a frustrating time period. Yes, no?
Yeah, it's better when they're going up and down.
Yeah. Okay. So that's coming to fruition. Now, what I don't recall if I said this or not, I know that I've said it during the shows out here, is I expect that the market's going to form a bottom sometime around the 20th. And I'm kind of going to the day here. And so I believe that I had the call right at the bottom. I had the call right at October 31st, so we're going to see the market start to move sideways, consolidate, and consolidate can go a little bit higher and lower out there. So that still is coming to fruition. Now I go back to the technicals, all right? And those items came from technicals as well. When I take a look at what the Qs have done, which have led the market up here, over the course of the last several trading sessions, we saw 20 million shares volume-wise yesterday. We saw 20 million on Friday. We saw 24 the day before, 25, 22 million. These 20 million share days out here, just like the Qs make lows with volume, as they did on October 15th, they also make at least short-term highs with light volume. And the Qs have done that. They haven't been able to bust out. And so from this trading pattern, we ought to see some kind of fall. I don't know to what extent. What I do know is that prices have gradually moved higher. And if I take a look at, therefore, the summation index for the New York Stock Exchange, the composite and the Dow, and it was the New York Stock Exchange that had me so, I don't know what the word is, so vigilant in being able to say, while the markets were crashing down, the markets are going to form a bottom. And I take a look at the New York Stock Exchange, specifically the wider swath of the market, we're seeing this price oscillator move lower, with prices kind of gradually moving higher. And especially where it's really identifiable is inside the Dow. Because inside the Dow, it has clearly moved higher. But it's now doing it with a descending tops price oscillator out here, much like we had a rising bottoms oscillator when we were forming the bottom inside the Dow. This is a pattern that says we're going to see some kind of decline. To what extent, I'm uncertain of. But I do know, come around that November 20th time frame, we'll know by then. So I'm just trying to put all that together with, and it's all still consistent with everything that I'm seeing play out here. So does that help you understand my thought process?
Yes, absolutely. Yep.
Yeah, so I don't know what it's going to take. It seems like it's not going to be Ebola that is the scare out here. I don't know what the event is. But right now, the signals are suggesting we're going to see some kind of retracement.
Okay. Thank you.
Oh, my pleasure. My pleasure. And as always, thanks so much for calling. And stay warm up there in Burlington. Alrighty. That was Mike. Folks, we're just out of time here for the day. Hey, go over to the homepage at TFNN.com. I'll talk about it during the next show out there, but I'm holding a 7-week trading, coaching, mentoring program. It begins on Saturday, November the 22nd. It's going to run for 7 weeks. We're going to do another live workshop on January the 9th out there while the markets are open live. And have let's see, it is Tuesday. So have a terrific Tuesday, and I'll look forward to seeing you bright and early tomorrow morning, if not in about 10 minutes. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.